Sounds like the Undertaker's out there.
Welcome to Brigham City. Good morning, Darren. Welcome to Brigham City.
Well, welcome everybody. I'm here with the Brigham City group, and so we appreciate you guys joining, and we'll be talking through just some hopefully things that will be helpful. I find that leadership can be lonely, but it's not that lonely if you just empower the people. And so I think one of the elements of leadership at large, and you guys are each leaders to your borrowers. We talk about ninja principles. People will take action when they have clarity and when they believe they are making the right decision. So the goal isn't for us to know everything and to tell them what's best for them. Our goal becomes, how do we articulate in a clear way to them information and tools that they can look at it from their life perspective and say, here's how I can move forward. And that gives courage, right? So that's part of what I'll go through today is there seems to be increasing concern just in the economy and different things going on. So I'll do my darndest to use some of my economics background and try and give a line of sight that at least that I'm seeing of what's going on. And like I say, my goal is that it connects in a meaningful way for you that you can see, here's what's going on, and then we'll do some therefore what into application and how you possible ways to adapt to a changing environment. Does that sound fair, guys?
Absolutely.
So, all righty. Well, I guess let's start with inflation. So what is inflation? In a basic definition, inflation is simply that we have too many dollars chasing too few goods. And so we see that now. I mean, if you go, well, I was at the car dealership last week getting my oil changed, and there were 2 Duramaxes available on the lot for $106,000. That's inflation by definition, right? They just don't have product, and so the demand for that product pushes those prices up. And we see that in food, we see that in gas, we see that in housing. We really see it everywhere. And so that's the basic concept of inflation. Well, how does that affect us, and why is that important to what we do in the mortgage industry? When we look at housing costs, there comes a point on inflation that things become unaffordable. And so I think it's important to be able to see in the trends of what's going on with that and how do we get out of an inflationary cycle. In understanding mortgage banking, I think it's important to understand that as we issue, we tend to see interest rates from the cost that it's costing our borrowers. But there's 2 sides to every coin. We have to look at it also a stakeholder and a shareholder in this entire process. We have to have an investor on the other side that is investing in that as an investment. And without those funds, we have no money to lend. Does that make sense? And so it's a basic principle that we have to understand and look at it from both lines of sight. So if we look at that, if I am an investor right now buying a mortgage-backed security, say at a 5% return, and inflation got announced again last week at 8.5%. If I'm an investor, I'm actually losing 3.5% of the value of my dollar year over year. Does that make sense? And that's where it becomes very important when you're looking at debt instruments. You've got to get a return to the investor and see what's going on. Well, the Federal Reserve has been purchasing and putting money in, and that's what subsidized those rates for quite some time. That's got to change. So as an example, in a traditional market without regulatory influence in that market, typically most investors, because it's a fairly secure investment to put it into a mortgage-backed security, they want typically about a 2% spread. So in theory, without the Federal Reserve's involvement, we should be at a 10.5% interest rate right now. Does that make sense? Just as perspective. Will we get there? Well, that's the wild card. I don't know how much the Fed will intervene, because they're trying to balance this, and it's a fine line. They're trying to balance how much are we involved, because it's another economic principle is a dollar of debt is just as effective as a dollar of cash in the economy. And so they put all this money in with the stimulus that's come in. We're at about $6.2 trillion in just economic stimulus due to COVID that's been dumped into the market. Do we have too many dollars chasing too few goods? Yes. In addition to that, we've got people that didn't spend money for 18 to 24 months who want to spend that money. So it's a combination thing. It's easy to look and say, well, whose fault is it? Well, it's just, we're here. It doesn't really help us. But understanding why we're here and how do we get that, in essence, $6 trillion out of the market to where it starts to function on its own becomes the question. Is that making sense so far, guys? So that's something called deflation. And so how do we get into that? And how does that economic cycle run? Well, deflation is just the opposite. Now we have too many goods and not enough dollars to buy. Does that make sense? So it's just the backwards. So let's talk about that. Most people look at low unemployment and say that's a strong economy. Well, the irony is low unemployment is the start of a recession, because we have a lot of people are clamoring for wages, clamoring for people to work for them, which increases the amount of money they have to spend that's in the economy, and that's also a component of this inflation. So low unemployment is actually you're on the lead side of a recession. That's where we're at. Does that make sense? So it's a little bit counterintuitive, but understanding big picture principles, I think, can help it come together. So as we go into a deflationary period, I'm going to take, well, let's use housing as an example, but I want to be clear. We're going to talk about housing here, but this is everything. This is agriculture. This is, I just talked about vehicles. The principle is uniform across an economy. This is not just our industry, but I think our industry, because of life cycle, can be instructive as we go through this discussion. So deflationary, how do we get that out? Well, if all of a sudden we end up with too many homes on the market, what happens? Pricing has to come down. That's how they can get them to sell. What is the biggest cost of every product or service in the world? It's labor. So all of a sudden, let's say that I'm not going to just pick on the house. Let's go to lumber. So let's say that we're in the lumber industry and we're reaping it out of the forest. We're running it through mills, all these types of things. All of a sudden, if they catch up and they are manufacturing as fast as they can go, and all of a sudden they have all this product to deliver, and all of a sudden housing slowed down, how do they sell it? They lower the price. Well, if they lower the price, can they maintain and exist without cutting expense? No, so they have to cut expense. The biggest component, some of that will be organically in systems and processes. Trudy just mentioned something that's great. That's a great takeaway for us as we walked in here. She said, I do everything on a budget. Wonderful takeaway. Guys, do everything on a budget. That'll be one of the final takeaways. She's spoiler alert. And you're in good hands with your leadership. It is one of those principles. So if they go, and some will be budgetary cuts, that they cut some services, but the big piece will be labor. And so if they lower and have to lay people off, now we have what? We have less people with income to spend in the economy. We still have goods and services. What has to happen? They have to lower prices. If they lower prices, they have to make more cuts. And that's where it starts to come through. And hopefully this makes sense that this is a life cycle. It's almost like trying to steer the Titanic. And so if you're looking way out at what's going on, you can see all this beginning to happen and where we're going, but it takes time, because this isn't the snap of a finger that this just changes overnight. I mean, this can be, typically it's a 6 to 12 month period for each increment, just to give you kind of a line of sight before there's enough pain that they're looking at saying, wait a minute, this isn't really turning around. And people will be asking the question, are the feds coming back to town? All those types of things. Well, the feds really can't come back to town, because that's the problem that we're in, and them throwing gas on it only exasperates the problem.
I'm not laying anybody off. Just make that.
I love it. Does that make sense? And so it's going in and understanding the cycle that comes across all industries. And so this affects everyone, right? That's a deflationary cycle. This is why it's typically, just as a history lesson, it's about a 3 to 5 year transition to get out of deflation. The 80s was an example of that. That's probably our real last inflationary correction. It was the 80s, and it was about a 3 to 5 year period. The wild cards and the variables that we don't know is we have a more developed Fed system, more in different things like that. We're more of an international global economies. So those are the things that you just can't quite see and predict what's going on. Will they try and be as merciful as possible? Absolutely, right? And I think that they'll be trying to feather this, but it's important to understand this is bigger than any one industry or individual. It goes across the board. Feeling good about inflation and deflation, just principles so far?
Yeah.
Okay. So a couple of things maybe, well, with that as a foundation, I'll jump into some timing and maybe some lines of sight. And I'll start to talk into just our industry and different things like that. Go back to 2012 to 2014, those that were in the business. Hi, Bobby. How often, when you looked at a credit report, did you see somebody with a bankruptcy or a foreclosure? 1 in 5, 1 in 7. It was really common. What about the last 2 years?
Not very often.
I don't think I have seen a bankruptcy in the last 2 years.
I linked up with a bankruptcy attorney, so I was staying like 4.
I like it. Okay, so this is relevant. This is part of this cycle of seeing what's going on. This is where it becomes a little bit more painful for our borrowers, and we'll get into how do we have empathy and help in these types of situations. You know, if we go back, we really for 20 years, by and large, we have been in a downward rate trend. We had a little bump up, but we have for 20 years we have been going down. Values by and large have gone up. We had the correction back in 07 to 2009 area, but I mean really we were talking an 18-month correction in and out. Inflationary cycles are 3 to 5 years typically. Does that make sense? So that's where it's a little bit different than a correction on getting out of this. So as we look at this, there's the intellectual side of learning. I'll share a story with you. Some of you may have heard I share it with my group all the time because it was instructive to me. Back a few years ago, I got to serve as what's called an honorary commander. And one of the things that I did is they would invite me in as the troops to go do life experiences with them. And one of the most bizarre ones, they were all sorts of giddy when the airman called and said, come do Chem Gear training with us. And I thought, oh, this sounds beautiful. They were so excited. So I went up and I met them on the base, and they kind of the process of what it looked like is I went in, we put all of our Chem Gear on. We went into this room, it was about the size of this room, and there were 14 of us in there, and the commanding officer went to the middle and he lit tear gas on fire, and it started burning, and you could see it fill the entire room. And we were fine. But then we had to come forward one by one and pull our mask off, and then we could run out of the building. I felt instantly what tear gas feels like. Intellectually and intuitively, it made sense to me. But I hadn't learned it until I pulled that mask off and walked out. So I asked the commanding officer, why do you do this? So they recertify with this pretty much every year for the active enlisted. And I'm like, why would you do this? His takeaway I thought was insightful. We want our people, when everything's on the line and they're, let's say they're in the desert in Iraq and tear gas falls, we want them to stay focused on the mission. We don't want them wondering, is my chem gear going to work? We want them focused on the mission. And so we don't want them to intellectually say my chem gear is going to work. We want them to experience it in a controlled environment. That makes sense? And it was instructive to me. I've tried to use that on life application and just having a little bit more wisdom as we look at things. I would say we're going into that cycle. Most of our borrowers really, I'm going to suggest 40 years and under, have never experienced this. Intellectually, they can see it. They can see the prices at the gas pump. They can see what it's costing them to fill their vehicle up, but they haven't experienced really having to cut back and to say no. That hurts. So is what we will see is most of them have been able to, because of the decreasing interest rates, been able to go into credit card debt. It's not that their budgets were working. They've been able to go into credit card debt. They've been able to go into car loans. They've been able to go into student loans. They've been able to do all these things. And because housing prices have been going up and interest rates have been coming down, they've been able to refinance every 3 to 4 years. And it feels their experience is not their intellectual side. Their experience is that everything just works out. Well, if interest rates, let's say that they're at 6.5%, has that started, by the way? Are consumers going into debt right now? Yeah, you heard James in our town hall last week share that the study just came out that it shows that $5,200 is the inflationary tax on the average American household over the past 12 months. That's how much of their disposable income due to inflation's already dissipated. Is that magically, did they get a $5,200 raise? No. Guess where it's going? Into credit cards to maintain lifestyle, right? And so, but their experience has been, it's stressful, but there's sunshine on the other end. Well, if we get to the other end in a deflationary cycle and rates are at 6.5% and their debt ratio is to the nines, and that rates are up, can they actually refinance and do it this go around? They can't do it. And that's when we see bankruptcy, foreclosure. Foreclosure is more driven by appreciation, not affordability, because if we have equity in the homes, they'll just sell them, and that'll avoid the foreclosures. But bankruptcies we're going to see begin to increase. That's normal in a deflationary experience, and that's hard. We need to have empathy for our borrowers. They're going to go through something that they've never wanted to go through at an increased rate. Does that make sense? And so these are trends that I hope you can see as you go to a 10,000 foot level and start to look at, oh, in that correction period that we had back there, it was very common we saw bankruptcy, and that was tough on real life people. It was tough on marriages. It was tough on kids. It was tough on, and that's tough. And that's a time to have empathy and courage to help lead people. Does that make sense? So I think we'll see that go. So supply and demand, if we can have a discussion about that for just a minute, what I'm seeing in the markets. This is incredibly insightful. We're about 4 months into the correction, guys. I've been watching it. And so we're underway. And you're typically, once again, about 6 to 9 months before society will start to do the oh crap. So what's going on? This isn't about people's desire or wants. I think this is, so I'm going to try and articulate this the right way. In Utah, for the last 2 years, about 18 months, we have averaged 1,500 to 1,600 homes available on the market in Utah, in the entire state. Normal for us, for a normal balanced market, is right around 8,000 to 9,000 homes. We have this too many dollars chasing too few goods, inflation, right? So by definition, that's what's been going on. We have had a substantial population migration into the state, and I'll get to that a little bit later on what I'm seeing on trends. So the reality, I think our number shouldn't be 8,000 to 9,000 homes based on our population growth. We probably need to be in that 12,000 home range to have a normal, in balance supply and demand market. That makes sense? So what's taking place? If I take the interest rate, December 15th, we were at 2.375. If I take yesterday's rate of 5.25, this is where it gets real. If you plug in, let's say that borrower in December qualified for a $400,000 loan amount, take your financial calculators and just change the interest rate. Leave the payment, let's calculate what the payment was at 2.375 at 400,000. And the thing that you're going to change now is leave the payment, everything else the same, but now move the interest rate to 5.25. What's that new amount that they qualify for? It's 290,000. That's approximately 33% of all the people that had their hand in the air in the state of Utah saying, I want to buy a home. Now, this is where the emotions get the best of us. Emotionally, we look at it, do all those people still want to buy a home? Yes. But under demand, can they buy a home? So what's happened? We have removed 33% of the demand in 1 quarter. This isn't about desire to buy a home or anything else. It's gone. There's a big difference between when we run our businesses and saying, this is what I feel like's happening or I want to happen, and they still want to buy a home. That is correct, but this is different. They can't buy a home. There's no inventory at that point. It's been removed from the market. So if you remove 33% of the potential buyers, what happens to supply? It has to go up. Well, what are we seeing? This is staggering to me. Everybody's celebrating online. I was watching Facebook yesterday. Oh, great, we've got inventory. We had 2,972 homes yesterday. So we are still have fierce demand going on. It has been going up almost 20% per week for the last 6 weeks, inventory. But you have to be able to understand the math and look at it. If we take 200 homes being added to the market and our baseline was 2,500, we divide that out, that's about 16% increase in supply. Once again, we're looking at trends, we're moving a Titanic. If we're growing inventory at 20% per week, this is actually an exponential thing that blows up, because the bigger that base gets, that trend is actually real. This will begin to expand very, very quickly on the inventory that's coming into the market. We're probably 6 months to get to an equilibrium, and I would say probably a year will be well over supply, and we'll see that pricing have to start to stabilize and come down a little bit. Does that make sense?
What happens if it comes down too much?
Great question. I'll hit that one in just a second. There is no such thing as coming down too much.
Okay.
That's the emotional side. The markets will equalize. It just takes time to get into the flow of what's going on.
When you say supply is increasing, it's increasing because we're knocking people out of the ability to purchase homes with the interest rates, right?
We have removed demand.
Okay.
Great.
Thank you.
Love it. And the goal is that you guys are catching this and seeing line of sight. That's a perfect question. I love connecting dots. That's exactly right. It's not about that they don't want to buy a home, and that's where everybody gets this wrong. They can't. They're out of the market. And so we have now removed 30% of the demand. What is naturally going to happen? This is very non-emotional to me. I'm just watching. These are basic fundamentals of economics. That's why inventory is growing. What do we have coming in Utah? All of the major builders last summer said what? Well, we're going to take all of our homes to spec. We are going to take them because we can get a lot more money out of them because of how crazy this market is. Not only is inventory increasing, in the next 2 months, we're going to see a incredible amount of spec homes dumped on the market that have been in this process for their entire last year of getting built, with supply chain, everything else that's been going on, that they're going to be flooding the market with all these all at once. Supply goes up. What happens? You get the idea. We're starting to see the reality of what happens. Does that make sense? So hopefully that's helpful. Couple of things. Once again, maybe I'll share just some graphs with you and look at our market. So Academy has a very good sample here in our local market of what's going on. So I'm going to flip this around here and see, do my darndest to navigate from the side here. So what do I watch? I watch the credit poll, because this takes out the, there's two cards that I think are instructive here. So if I look at, and this is the entire region, if I look at credit polls year over year, this is a card that you can look at. So the dark blue line here is this year, the light blue line was last year, and the gray line was 2 years ago. These are raw numbers of what's going on what we have coming in. Does that make sense? We're down about 40%. And this is the supply and demand that we're seeing on the front side. Are you guys working hard? Yeah, you're working hard. Guys, this is about just less units. It's not that you're doing a poor job. And sometimes I think that's where it can get discouraging. I'll talk about how to get through that on a mindset basis. We can get discouraged and say, oh my gosh, guys, it's just less units. One of the things, I was on a walk with my wife this morning, and I looked at it and said, what's one of the gifts of this? I was on a walk with my wife this morning. The last 2 years, there's been so much demand. We'd make a walk about once a week. Do I want to walk with my wife once a week? No. We can have a gift here, guys. It's mindset and gratitude of what we're seeing. There's just going to be less units available on the market. Does that mean it's zero? No, that is not zero, guys. This is not zero. Don't let the mind go to zero. So there are our business. There's credits, right? That's going there. Be very, very specific on that. The other part that you're going to see, though, is this is what you can see of the credit to fund. This is the concept of what we were just talking about, of 33% of the market being removed from buying. I can see this in this graph. This is the concept of people, they still want to buy a home, right? They have their hand in the air. They're still asking, can I qualify for a home? Well, on average, we were running about, the last couple of years, we've been running about 52% of those that we pull credit report on, we fund a loan for. Right now, today, we are at, is that 32%? Yeah, we're down to 32%, meaning less people that have their hand in that are realizing that I can't move forward. And that's why I say we're right on the beginning cusp of all this. These are the trends that I'm just looking for, saying this is all spot on with what I'm talking about, right? And stuff. So, and it's not gusto, it's not fighting for every deal. Well, we do have to fight for every deal, but it's this is the changing of the tides of what we're looking at. Is this making sense, guys? Couple other things while I've got that pulled up. Maybe this is another one. I won't pull up the new construction. You guys get this on the report for the weekly traffic reports. Also very insightful. Contract cancellations on new construction are up about 32% since the first of the year. Traffic's down going into models about 28%. And then the contract conversion is off about 21%, meaning those that are in the model home that they actually write a contract. That's been over the last quarter. We still have people screaming, trying, fighting for a home because we haven't come closer to an equilibrium. That's why it's hard to see, right? But those are all the indicators. Another one that I think is interesting, if you jump into this is one of my favorite reports. So if you go into the real estate report card for into MBS Highway, I think this is really helpful and insightful. Let me pull a couple of these. So this is one that we can look at and see what's going on. Let me pull that around. Sorry, let me try and reboot that. Normally it pops right up here. Here we are. So let's go to, let me see if I can get to pull. I'm going to take a Davis County. Here we are. That's what I was after. We'll get there, guys. So you can search this by county. This I think is instructive of supply and demand. One of my favorite indexes is the affordability index. And as what this does, I'm going to scroll down to that. So here's our affordability index. Is what this does is this pulls in the cost of your wages, interest rates, basically all your cost of living, says how affordable compared to the rest of the nation is in this situation, Davis County. So on this scale, 100 is right there. 100 is an equilibrium. So actually below 100 means that it's more expensive to live in Davis County than the rest of the nation. Above the score of 100 means that it's more affordable. Now, we may look at it and say people are coming to Utah because we have beautiful mountains and a great culture. That is true as one of the considerations. But if we look at California and our coastal cities, they've been down in the 60, right around 60 on their score. People just can't afford to live there. And so one of the reasons they've moved to Utah, into Idaho and the Intermountain West is actual affordability. Their dollar just goes a lot further, right? And so I think this is important to look at. What's happening to our affordability as people are coming in? It's going down dramatically. So, but compared to the rest of the nation, what's that, about 116? Yeah, so we're at 116 in Davis County right now. Still much more affordable. Will Davis County be a place that people will still look at and say, if I'm looking at every place in Utah that I can move to and trying to balance that out, will more people continue to come here? The answer is yes, that's true. But this is where I find it a little bit insightful as we start to look at what's going on. So if I go to Box Elder, looks the same. Weber County looks pretty much the same. I'll let you go do this, but I want to pick on another county up here that may surprise you, Cache County. Cache County is at equilibrium. It's right at 99. Salt Lake County, Utah County, below. They're down at about 96. This is the moving of a Titanic. Is there still massive population growth coming into the state of Utah? Yes. Will that slow down?
Yes.
Yes, the economics will change it. As that becomes less and less affordable and people are looking at where can I move my family that my dollar, and it's going to become much more heightened because every dollar is going to matter in people's budgets. This is going to become exponentially more important as their budgets are stretched. Where can I get the most value will become a much bigger discussion. And so Utah County, Salt Lake County, there's a lot of jobs there. It's still going to be a lot of people coming. I typically find that once that affordability index hits about 80, we are now a migration out. That's when most places start a migration out. Washington County's down at that level right now. It's become ludicrously expensive in Washington County when you pull all things into consideration. These are just economics, right? And so it gives you a trend and a foresight of what's coming on. How do I see this showing up? In the past 3 weeks, I've had 3 of my past clients who have lived in Utah for 20 years call me and say, Brett, are you licensed in Kansas? Brett, are you licensed in Tennessee? Brett, are you licensed in Missouri? And guess what every one of them did? They're selling because they looked at it and said, I'm going to sell all this and capture all this equity. I'm going to go, what I'm just closed in Kansas, bought a 2-acre parcel with a house for $300,000, was able to find a great job and affordability. Am I actually seeing when I emotionally step back and see what's going on, are people actually starting to question and migrate out of our market?
I know I've thought about
Does that make sense?
it, for sure.
And this will show up. These are the numbers. It takes people a while to get this. That's why I'm saying that's why this is a slow moving ship. It takes a while for people to get there to realize and say, is there a better way to do this? And they'll start to look around and make rational, hard decisions. Here's the big difference. As decisions become not their decision because they don't have an option, that takes courage to make a change to a whole new level. Does that make sense? And that's what we'll see going on. That's what, we can say it's political environment, all these different types of things that are in the coastal cities. I find that everybody that's coming actually really, they went there for a reason. They loved the environment. They loved being close to the ocean. They loved all these types of things. Then they couldn't afford it. They had to move stuff. So, some of those things were considerations, but at the end of the day, that's not why they moved. Does that make sense? So hopefully that gives you a little bit of line of sight on just trends that I'm seeing and gives you tools to be looking at as you're doing your counseling with your borrowers, as you're looking at yourself, that you can look at it and walk away. You don't have to have Brett come give a presentation every month on what's it looking like right now, right? You've got the tools, and so we're just looking big picture where things trending and what's going on. So I maybe share. Therefore, what just happened? Nope. Let me come back. All right. System wants to do system updates. So I think this is a big time opportunity for us in this industry. A couple of us have been at it for a little while. I've been through a lot of corrections. Well, 3. I've been through corrections. Trudy's been through corrections. Are we still here? Yeah. Guys, I want to be really clear. Sometimes when we talk about this, to me, the uncaring conversation is not to have the conversation. Leaders have to help people see what's going on because it will give you the agency to make courageous decisions, even in your own personal finances and in how you're helping our business partners. Our referral partners, the realtors, are still running around on fire. Andy's great. Oh my gosh, as if I can't get a house. It's going to be a very, very different story for them by the end of the year. That makes sense. What happens in supply and demand? This is just the reality. Are people going to get out of the business? It's going to force them out of the business. It's a good thing. This is the normal correction. That's what happens. There is a correction that takes place. That's why I don't sugarcoat it and say, hey, nothing's going to change for us. I have to look at it and say, guys, things are changing. So therefore what? How do we move forward with purpose and confidence? So I think of our borrowers. I had one call, and I'll just, because it's a story that I think is instructive. I had a borrower that I've done 3 loans for over the years. I was out of town in Ecuador the last week of December. They tried reaching out to me, and I wasn't around, so they called another lender. Their question was, how much we want to do an upgrade. We've got 4 kids now, and we want a little bit bigger home. What can I qualify for? Well, the lender they were talking to qualified them at a 55% debt to income ratio. Now, this isn't all the lender's fault. So they went through and made the decision to sell their $450,000 home, take the equity at a 55 debt ratio, they could qualify for a $650,000 home. So they went through the process, got their house listed, they got the consultation, said, okay, we feel good about that, we're going to move ahead. Took them 3 or 4 weeks to get their house ready. They put it on the market, it sold, they got their $450,000. And mid-March, they're still battling for homes. They call me and say, we're discouraged. We've been working with this other lender. Can you talk me through it? And so I pull it up and look at it. Well, Brett's been at this a long time. And so I started to have a fatherly discussion. And I want to use this as an example. This is where I think empathy becomes important. So as I ran their numbers, they actually at a 55% debt to income ratio qualified for 480 at this point because interest rates come up. Now the other lender couldn't see that coming, right? And so I mean, I'm not picking on the other lender. This is just a victim of circumstance, and I think it illustrates it. If I ran their debt ratio at 43%, which is where I qualify all my borrowers, that number was no longer 480. It was actually 380. And I walked them through that. I said, guys, I can put you in at 480. I want you, and I gave them the payment, and I said, does that scare you? And they said, we don't know. It's an honest answer, right? They don't know what that budget is. So I said, would you please grab, when you go home, grab your pay stubs, you and your spouse's pay stubs. And if you look at it, I know by those ratios, if you look at your net income and take that mortgage payment out, you guys will have $300 a month to live on. That's hard. I get it from debt ratios. I've been at it a long time. But I'm looking at it saying, so what's going to happen? Would they paid off all their debt, so they feel wealthy again when they sold the home? But I know what's going to have to happen. And I mentioned that to him. I said, if we put you to 45% debt to income on the housing ratio, you are going to start to use credit cards again. There's no way around it. You are going to have to finance a car. What's their answer to me? It's like, oh no, we just paid for our cars and paid them off. We're not going to have to buy a car. You're going to buy a new car because it's going to break down in 3 or 4 years, right? This is getting the emotions out of the way. And so I'm talking through this. And I sent them out the door looking at 380. Is there any homes at 380 for them with a household of 4? What are they? They're heartbroken, discouraged, and mad at themselves because they're actually now going to get less home than what they sold. So I had him talk to Jess. Jess hasn't been through this fatherly cycle. Jess was looking at it, and he took him back and qualified him at the max. Is that a bad thing? That's the discussion I want to have here for a minute. This is where it gets hard for people. I've got a father and a mother who don't have a home for their kids. So now it's real. It's not on paper or a process for me to sit there and lecture them. Jess is going to help them. And he's going to help them have the courage to go for it. Now, is that responsible? I don't know. Therein lies the telltale. Do I know when this is going to turn around? I don't. One of the messages I want to share, when we have inflationary cycles and this goes up and interest rates come up, what does that create on the other side? Big opportunity. Because rates will come back down, and that's massive opportunity for us in the industry, but it's also massive opportunity for our borrowers. What if this family goes and they accumulate $30,000 in credit card debt and $60,000 in car loans, and in 3 years, interest rates have come back down and housing prices have stabilized? Can they make it another go around? Probably. Do I know when that's going to turn? I don't. So that's all I can do is give them counsel and advice and help them make the courageous decision that only they can make. I'm just giving them a heads up. And I think it was the right discussion still to have, to look at and say, guys, you can't go to Disneyland. Guys, you are going to be trying to budget to $300 a month. But housing's important. What's the alternative? Do we go rent? They can't afford the rent. Does that make sense? This is where supply and demand, there is a pinnacle that comes to all this. Those are real life human beings. So to have empathy and to help them make those decisions and to walk through and say, here's the path forward. is sitting on the sidelines hoping that interest rates going to come down and going to help their situation. So if I get scared with them and say, you know what, let's wait till January and see what happens. Understanding the things we started our conversation with, which way are rates likely going to continue to head up? It's not helping their situation. And so I have to advise them and give them the advice, and then they're going to have to make the life choices of how much they want this for their family. Does that make sense? This is where it gets messy, guys. This is real life families, and you can help. And I share that just as an example, because that's where it's going to get messy with, is we're trying to have those discussions. I think even in our own minds, don't forget the person that's sitting behind that decision. They're going to experience something that we talked about earlier that they've never experienced before in their generation. Trudy, you're about 1 year older than me, but I don't think you remember the 80s.
Yeah, I do really well.
The early 80s? I mean, like from an adult standpoint.
No,
I
You were a
remember.
teenager.
I was a teenager.
Oh, Chris, we got Chris. Yes, hallelujah. I got Chris in there. You know, I was talking to my mom on that way up here. Was this experience of tear gas, right? As I was talking to my mom, she was asking those questions around. It's like, you were alive, Brett, but you didn't. Intellectually, you're looking at reports, you're seeing all this. You didn't live through us looking at you and saying, no, you can't get new shoes. I'm sorry, those shoes have to go another 2 years.
Let's reset.
Does that make sense? I've never experienced that. Intellectually, I tell myself I can. And we can say it's good. This was actually where I was talking to my mom and said, no, this is a different generation. The answer is not to go back and to recreate what happened before. This is actually different, and we will learn different things. But I want the takeaway, one of the takeaways to be, is they got through it. And it was hard, and it's going to be hard. And when we understand that things are hard, it allows us to show up and do hard things every day and not just sit back and hope things work out, right? So the courage to rise is important. So there is a flip side to this, guys. It's going to tighten. There are just not going to be as many units in the industry, and that affects every single person in this room. Every person in the industry. That's just the reality, is there's not as many units, and that affects all of us.
But the units are higher. I mean, we were doing units at $85,000.
The dollar volume is,
150,
yeah.
and so it's
The
yeah,
dollar
dollars.
volume is higher. The
Yeah.
units are decreasing
Yeah, the dollars,
dramatically.
right.
So the units are of to manufacture alone are decreasing dramatically. The dollar volume is coming up. How much will it correct back? Those are the things that we don't know. I think, Julie, to your question is, well, how much can it go? It's very simple to me. We actually just take income growth rates and parallel that to home appreciation rates. That's just the basics of economics, and I can see exactly where they're gonna go to. Ta-da! Very non-emotional. It takes us a year or 18 months to get there, but it's there. That's sustainability and affordability. Very fundamentally, it's just economics to me, and it will come into equilibrium, and then it will correct, and it'll continue to go up. Things will still continue to rise. This isn't forever, right? But it is a correctionary period. So I'll go through that. So maybe on that, how do we meet the challenges of a changing market? I think it's important. It's in our core convictions. We have a company with purpose. We have a company with culture, and it is in our core convictions. Does this make sense that it's going to take courage, guys? Are these courageous conversations to be able to have and just have this? Does this cause a little bit of uneasiness in everybody? Good. Hopefully that leads to change for everybody. My wife and I, we were looking at that this morning. We globetrot everywhere. We have a lot of first world problems, right? Does that affect us? Yeah, me hoping and just saying it's not going to happen doesn't help. We're making corrections and looking at it saying we are going to still love our first world problems, but it's going to look different. And if we change now rather than not changing and getting ourselves into a situation a year and a half from now, hoping it's just maybe the feds will pull the lever in a year and a half and they'll come back down and it'll work out. Is that courage? That's not courage. So have the courage to look, and as Trudy said, live on a budget. Personally, help advise our realtor partners, our builder partners, live on a budget. Help them see what's coming because they will make courageous decisions. Humanity is remarkable. If they can understand what's coming at them, they will make courageous decisions. And so we need to have courage. It will lead us to make better decisions. In the resilience, is this going to take some resilience? Yeah. Is there still incredible opportunity in our industry? 100%. We've lived through the cycles. We're sitting here, and it creates incredible opportunity because those without core convictions, it's going to get completely in their heads, and they'll be the first to scatter. And that's still, now we have less supply of loan officers and industry participants going for those same units. It will equalize, guys. This is not a message, abandon ship. And I want to be really clear on that. Is this just affecting our industry?
No.
So where are you going to go?
Exactly.
This is agriculture. This is education. There's going to be less dollars. It's going to affect graduating seniors. Are they feeling this? Is that going to mess with their psyche and how much student loan debt they're going to? I bet you it is. It's going to go across the board. This is everywhere. And so sometimes we like to say, well, man, exit. Well, where are you going to run? You're already masters of your craft. Build on it, be resilient, and buckle down on the daily disciplines that matter. The integrity. Integrity is going to become much more important. This I have learned from all the cycles I've been through. Fraud is going to increase. People scrapping to try and provide for their families are going to make very poor decisions. Integrity, I do not believe that we know if we have integrity until it costs us something. That's when we know we have integrity, is when it costs us something. And this will cost us something. It will expose or elevate our moral character and what we're made of. Focus on your moral character. Be grateful. Focus on gratitude. Fear and gratitude cannot exist in the same thing. And when we've got gratitude, we can make courageous decisions. We don't need to operate in fear. We can actually lead others in that integrity of doing the right things every time and not caving is critical to rise and to endure and to make it through. Going to the path of less integrity does not lead you where you want to go. It is a very short-term gain and will not turn out well for your career. Selfless. This is a time to be selfless. What does that look like? One thing I would throw in is I think everybody has to chip in. We have those discussions, very real. We look at it on an employee, can't we have less units? I'm looking at saying, do we work together? Or do we adapt to a market? I hope we'll be selfless. The answer's in the middle. We want to work together. We all benefited from an incredible boom. Bonuses were through the roof. It doesn't help to look in hindsight, but what have I been saying for the last 2 years? This is a gift. This is a gift. Do not reset your baseline. This was not a normal market. This was a gift. We're here now. It doesn't help to have the fatherly lecture. I've been through it, and maybe you'll have that lecture next time we go through this, right? And you'll be able to share that, and some people will listen, some people won't. But that looks different. I encourage you to consider being selfless as teams, to look at it and say, how do we make things happen? The answer of that's not my job will be prophetic. Does that make sense? It is all hands on deck, and as teams, we are stronger together than apart. And if we go to an entitled standpoint to say, but you owe me, the market will not owe anyone anything. When we show up and add value every day, it naturally comes to you. So that's something as I look at it, personal attitudes of how we show up in society every day. This isn't just at work, it's society every day. If we want to be a contributor and add value, you will grow. You will actually grow in incredible ways. Interestingly enough, back from the 2007 to 2010 period, Academy, my personal business grew at 200% per year when everybody else was getting out. This is the recipe, guys. But we have to show up and get after it. Empathy. I think empathy is important. What we've talked about today in forecast, hopefully you can just see that it is what it is. but these are real life people. This is us. This will mess with each of us as we go through it. Are we going to have bad days as we're wrestling with this? And it affects each of our families at different times in different ways. Yeah, we're going to have a bad day. Rather than slapping them in the face and saying, hey, get on the team. Maybe put your arm around them for a minute and look at it and say, this is tough. We're in it together, right? And we can do this. Your referral partners are going to need this. Your clients are going to need this as they are discouraged and looking at it saying, what do we do? It is a time for empathy. Those core convictions are your recipe to success. It may seem cliche, but it's not cliche. It is your recipe to success, and that's where you'll shine. So couple of other just basic principles. One of the ninja principles, discover pain or pleasure. It's important that we're asking better questions. When people are reaching out to you, ask more questions. Understand what that underlying concern. Slow down. We're going to have more time, guys. Slow down. Spend some time with them. Discover what's really going on in that household. Understand what the pain is, and it will change the way you're able to help them. I think that it's important. I was going to play a couple of videos. Maybe I'll just attach them to the recording after. One of them, I'm playing for the RPAC convention next week for all the realtors, and it's going through all of the products we're adding to our product portfolio. We are striving to be resilient as a company. We're trying to have more empathy. The market's changing. We're pivoting, and we're adding more products to consider. Does that require us to understand more products to help our clients? Yes. And yet we may look at it and say, that's not my job. I don't really want to learn new products. That will be prophetic. We have to get in and become masters of our craft every day and be able to learn all these products. As I look at Jess and I's pipeline, we were blown away when we looked at the product mix of what's going on in there. I mean, we had 32 loans in our pipeline, and there were 16 different products in there. It was astronomical, just because we were having to pull so many different levers and use so many different products. Some of them we were brokering, some of them we were doing this, but we were listening to what the customer needed and we were solving their solution. It looks different than it did 6 months ago. It was a lot easier just to conventional, day one certainty, let's ram this thing through, let's rock and roll. Are we having to work a lot harder for every deal that we have now? Yes, but we're solving solutions and helping people. We have to rise and become masters of the craft. If you will do that, you'll be just fine, guys, and you'll be able to identify how to help people. Keep baseline low. I just use that example. If you aren't running a personal family budget, get a personal family budget and get it today. Always should have a personal family budget. So, I mean, that's just a basic principle of financial management. But if you don't have it, you need to get really, really clear on that, what that is, and make those decisions now. The sooner you get ahead of it, the less painful it is on a correction, and you can sustain through it. So that's one of the courageous takeaways. Don't stick your head in the sand and say, this isn't going to affect me, not me. I'm inviting you to do a basic financial principle and get a budget. I would invite your referral partners to get a budget. If you can articulate this to them, help them see it, that is a caring conversation. To have that conversation 18 months to 2 years from now when they've gone completely backwards and they were hoping everything would work out is not leadership, and that's not partnership. This is not a doomsday talk. This is just a baseline reset of how do we move forward in difficult circumstances. We become resilient. Start each day at zero. I think that's important. A lot of times all of us get that entitled attitude where we look at it and say, hey, somebody owes me something today. It's just going to come. I've been at this a long time. I'm going to have 10 people call me today, right? We can all get that entitled position, but start at zero every day. You start at zero and you're out to add value. Do your 50 live interviews. Be contacting people. If you're contacting people, what is going to happen in an incredible way? Pain is going to go up across the board. If you're talking to people, you will find a lot of business and be able to help a lot of people make courageous decisions. Does that make sense? So be out there. Do the daily disciplines. If you get sidetracked and you're constantly looking out saying, I wonder if I'm in the right place, it's going to get really tough on you. I would be all in and commit and go. If you'll go all in and commit, You're going to succeed. And I think once again, that comes back often from gratitude. It will look different, guys. But if you've got gratitude in your heart and you're looking and saying, here's what I have, not here's what I lack, put a smile on your face, you go win the day. And that's pretty awesome. I just got your Glint surveys. One shout I wanted to put in. I'm grateful for this group. As I looked at the comments, there was more comments of simple gratitude in this group than any other group in the region. That will allow you to be resilient. So thank you. That's a choice. That is a choice, and it's to show up and to do that. So yeah, I'll show those other videos on just, I'll send out our core conviction video just as a reminder, and then I'll send that RPAC video just as an example of how do you get out and share their message with our referral partners, what we're doing to pivot and change. So I'll send those out. So with that, questions? Need to loosen the tie. It's a little warm in here. No.
A takeaway that I put in is rather than doing first-time home buyer classes, we can do budgeting classes and empower our buyers. If we've got a 30% drop and putting these guys on what is your target goal of a new housing expense? We take that amount, we put it Ramsey style, however we want to do those. Those are some big opportunities for us to set people up. We've had those conversations. Passed out more budget letters in the last 3 months than we have in a long time. So
that's vision. The answer isn't no forever.
No.
We will come out on the other side of this, and if you can create the vision that they have something to fight for and to look forward to, if people have vision, they will do incredible things. And that's a great way to look at down the road and say the answer isn't no forever. But if they choose not to get on the budget and do something, guess what the answer is? No forever.
Yeah. Gotta start somewhere.
Yeah, and you will build a pipeline of buyers that the flip side of this thing is astronomical. Great takeaway.
Partnering more with financial planners, CMAs, maybe coming up with more long-term plans for their potential clients.
Absolutely.
I don't know, on the mortgage side as well as on their side.
Yeah, the financial advisor, I met with my financial advisor 2 weeks ago. It's kind of an interesting conversation. As I went through it, he was, I've got a very seasoned financial advisor. He's been through a lot of markets. That's why I use him. And he was really timid when I walked in. And I was just reading body language, and I was kind of intrigued. And as we went through everything, he was showing me all my portfolio performance, kind of by sector, everything that was going on. Were they as good as last year? No. And he got to the end, he's like, so, okay, what do you want to do? I was like, well, we follow the process. We set up the process before. I don't think about it. We just follow the process. I don't make decisions when things are painful. I follow the process. And he almost started crying. He looked at it and said, I am so tired of getting yelled at and beat up. Thank you for understanding the opportunity that is actually here. I'm going to continue to buy through the process. He was beat down. This is one of the best. Our financial advisors are going to need help to help their clients navigate, and not what happens. They make very irrational decisions. That's how we get money out of the economy, guys. Everybody makes really poor, stupid financial decisions. They cash in their 401ks to pay off the credit card, and this is what gets us in 3 to 5 years is they will pull every lever that they've worked for 10 to 15 years to try and sustain before we end up in a bankruptcy. That's why this takes so long in the inflationary cycle to get all that money out. So great takeaway. Other insights, questions?
Brett, it looks like Caleb had a question on the chat for you.
Perfect, thank you. Go pull that up. Hi, Brett, really appreciate the insight. You mentioned price corrections Utah in a year. I'm curious to hear what range of price corrections you believe. That's a great question. So Caleb, the answer to that is we don't know. I'm really good at forecasting in the rearview mirror because I have data. And I can get closer as we get into it. The unknowns to that is we don't know what the feds are going to do. We just don't know those answers. And so will things stabilize? Yes, up to the point that we have. It's not that the market's going to crash. It's just that it's going to stabilize. Is 23% appreciation stable for anyone? No. Captain Obvious. And so if it comes back, are we still short on housing units? Yes, we are still. We look at the bones of it. We are still short on housing units.
You said how many we had to have? 12,000.
12,000.
And we're at 2.
We just hit 2972.
Just almost 30.
Yes. I think we'll get there by the end of the year, and then we'll be in equilibrium. That'll be kind of an actual okay market. It may take 4 to 5, 6 months to sell that home.
So you think we get 12,000 by the end of the year?
Yeah, very much so. And that's actually a good market. Are we still more affordable, particularly if I look at Box Elder, Weber, Davis counties? Are we more affordable than the rest of the state?
Yeah.
Yes. Will that actually be more of a consideration as people are looking for a place to move? Yes, there's opportunity in that. See the opportunity.
There's power in these things. I mean, we've got job increases. Our wages have gone up. We've got Walmart distribution at $31 an hour on the weekends. Huge benefit because of this economy. We're building townhomes that was affordable housing. Kids getting married don't need to buy houses. They can buy townhomes and start in those prices. We're resetting an economy like we talked about that they've never witnessed or been a part of, and it's our jobs and the economy's world to twist that and show them a different way. And this is how we do it, is showing them the different way.
Big picture economy, because that may be like, well, I'm going to get a part-time job at Walmart. What's going to happen to the $31 an hour at Walmart within 2 years? It's going to go down.
But it's coaching our clients so they can get to a better job.
That's
because
correct.
that's what's happening is a lot of them don't believe they have an opportunity and they think they're going to be at $12 an hour forever. But knowing what employers are around us and knowing that we can coach them to better employment, coach them to better these types of things. Take a weekend job, pay off some of this debt, get yourself in a better position.
Best part is they can still be your neighbors. I mean, what more reason would they want to move to our counties?
Yeah. Somebody else had a, oh, no, she's just hopping on. She's good.
Okay, perfect.
Question I had with kind of talking about the rising as far as inventory, stuff like that.
Mhm.
I read, when I talk to clients, I get the same story of, oh, I'm waiting for the market to crash. You do what you can to try and talk them through that I'm not seeing a crash, but maybe a slowdown.
Mm-hmm.
Is maybe something bringing up the higher inventory, maybe longer times. Is that something that you think might help in those discussions?
That's a great question. If I can answer that, probably different than what you're asking the question. That's a sales answer. Courage to rise is to have value conversations of what's going on. We haven't answered the question. If we're telling them what's going to happen with markets, they have to believe it.
Mm-hmm.
If I look at what's going to happen, if interest rates go up another 1.5%, 2%, and values drop even by 10 to 15%, what happened to their spendable income? They're net zero. They're in the exact same spot. To me, the question comes, if I had a borrower, and so this is how I would advise someone in this type of a market, trying to hear them. What's their real question? Am I going to overpay for a house? That's their real question of what they're looking at. Well, what if they need, I'm going to go back to this family that I'm talking about because I think this can help connect the dot. Are they concerned about timing the market? They're out on the streets now living with their parents with 4 kids.
Nope.
We think they're asking, should I buy a house right now? No. If we're understanding and understanding what's going on in their lives, we're seeing them. I can't provide for my kids. I don't have a space. They're now unstable. They don't have the school that they're going to. We're pivoting all over. Don't miss the mark of what they're really focused on. This is where we can help people. So if I go to that and understand that and say, family, you're asking an important question and it's a tough question. The answer is you don't have the answer and I don't have the answer. My advice to you would be if you have to sell that home in the next 1 to 2 to 3 years, there could be a little bit of a reduction in property values. The numbers tell us that. Are you buying this home for 1 to 2 to 3 years? No, they were buying a home to raise their family and they're probably gonna be there 10 years. So let's focus on what you're doing. If you wanna have the courage to go in and get really tight on a budget and you wanna work at this, you know what? Maybe in 3 to 4 years, these rates are back down. Can we refinance you and can we keep you in that home and keep you going on the path of where you wanted to be? The answer is yes. Help them make courageous decisions, but I think we go too quick to trying to sound intellectual in exactly what's going to happen with the market, and we forget to ask that question, what's really happening with that family? And so help them work through what they're really feeling. They're asking the only question they know how to ask. Should I buy right now because it might crash? Well, it doesn't really matter if I'm buying for 5 to 10 years out. It's going to be up, they're going to be fine, and most importantly, they're going to have what? They're going to have a house. Mm-hmm. Will they be bouncing around a lot less than they have the last 4 or 5 years on people moving? Yeah, they're great interest rates. That's the reality. It's just going to be a natural cause and effect. And so that's where I look at it and say, this will correct itself just fine. The question is how quick will we come out of it? None of us can answer that. So help them see clearly. And maybe this is helpful. I use door number 1, door number 2 analogies with people. So door number 1, are you fine living in your parents' basement with 4 kids for the next 3 years? That's not for me to decide. That's why I use that terminology. Door number 2, here's what you can afford. It looks different than what you were hoping for. But if you grab it and you're in there, am I really comfortable in 5 to 10 years this is going to turn out really, really well for them? Absolutely. They've lived through it long enough that they've been through these cycles, most of them, to be able to look at it and say, this is going to come out on the other side. Have the courage to jump in. Don't make a poor decision by going with door number 1. It's really not going to get you where you want to go. Door number 2 is still a feasible door to take for you if you want to, but it has to be their decision to take the door. Because if we force them into it, they're going to be calling, they're going to be mad at you that you put them into a bad situation 2 years from now. They're going to curse your name. But if you help them understand, we made the decision, we went into this, they will refer you to everybody because you helped solve that true innate pain. Is that helpful at all?
Yeah.
Okay. Great question. Thank you. Others?
Buybacks. So back to your scenario with Jess, I mean, if that family has $300 at the end of the day, to live off of, and we're seeing rates increase, if they move forward and purchase a house, how do we sleep at night knowing that that's all they have to live off of?
It's a great question. I don't have the answer to that. That's the one that I wrestle with. That's why I kicked him over to Jess. No, I mean, and he's not taking advantage of him. I think he's having a very empathetic approach. I've just been at it a lot longer. We tend to put our life perspective onto everybody else, and I don't think that's the answer. I think that we educate them, we help them, and we let them make decisions. Right. If we're going to own those decisions for them, it's difficult. Now, what does that look like in the buyback area? We are already seeing the industry pivot. What's happened to home equity lines? No. About a year ago, Wells Fargo and Chase, they stopped offering home equity lines. They saw this coming. You can't even apply for one. Are we going to have a tightening of credit standards the deeper we get into this? Yes. Melinda, cover your ears. No, we'll still follow agency. The thing is that we're still qualifying them, and I think that's one of the things. If I put them in at a qualified amount of that 55, do we have a history of them making it? Yes, the majority do. There will be some that don't, and there's going to be probably more. We typically see a default rate maybe go from 2 to 10%. It doesn't mean that 100% default, and that's where our minds tend to go. They're going to be incredibly resilient. We're looking at just the snapshot. We don't know the discussions. As I've advised this family that's now living in their parents' basement, what if mom and dad are also saying this is not a good long 3-year plan? We are in so much pain. We're going to help $400 a month, and we don't know that. These are the untold stories that we have to honor people's agency to get out and to have those courageous decisions of what's going on that we may not see. And those are real live human connections that come together. And that's why they help sustain often beyond the debt ratios that we're seeing.
I think if you're honest with it, you don't feel bad. They're aware. Yeah. They're fully aware. Yeah. It's not something that you're hiding or saying, oh, you're going to have so much money left over, you're good.
You got it.
If you're honest and say, here's where you're at, and they still decide, then yeah, you support them.
Please look at your disclosures.
That's right.
Encourage them, yeah.
So that's a great discussion. I mean, you look at it financially, we have set aside reserves. We set aside reserves in good days, and Trudy has budgeted that in. We have that. As loan officers, can that hit you as an EPD and an EPO? Yes. What's one of the takeaways? Set money aside. And just realize that it is what it is. You may see 1 or 2 more. The goal is that you're continuing to do business and growing. This isn't, Brett talked today, my income is now going to be 0. Can I make it for 3 years on what's in my savings account? If that's the takeaway, you did not hear a word I said. So you guys are remarkable. Do the daily disciplines. Pain is going to grow exponentially in the economy. And if you can solve that pain, that equals business.
Not everyone's willing to do the disciplines.
Mm-hmm.
And I guarantee you, if you're the one doing it, you'll get it. The business is there.
You got it. Other questions?
So painful.
That's what they are, is they're painful.
Mhm.
That's what a correction is. Okay, well, hopefully that's helpful, insightful. Share the message, and hopefully getting down, not your opinions, but that's why hopefully you can see I'm not trying to put necessarily my opinion or spin into this. I'm just looking at core principles that we can dive into any market that we operate in. We can go into Idaho and look at the same thing. Some of you are in Wyoming. We can pull up the same data and look at Wyoming. All these markets literally by county look different. And just become an expert in helping people, providing them with the expertise and the tools. That's the academy model, is decentralization. Give people as much information as they can, and we believe fundamentally that they're going to make the right decision at the local level. And so that's what we do. Keep on keeping on. So thank you guys for coming and participating today. So
Thank you.
Thanks, Brett.